Where you have seen choppiness into the markets continue. It's about the FOMC meeting which starts tomorrow, and ahead of that you have seen a bit of a cautiousness continue into the commodity space. The crude oil prices of course have seen some bargain buying coming on the lower side, and this is after a decline of nearly 3% in the previous week. It's really the base metal space you need to watch out for. You have seen mixed data come out of China and US, but the weakness in US dollar is something that is supporting this space as well. So nearly 0.5% up for most of those base metal prices on your screens. Let's get in then. Biren Vakil, who's commodity consultant, Paradigm Commodity Advisors, and he joins us live from studios in Ahmedabad. Biren, hi, welcome. How would you look at the gold prices right now? Because while we are trading near those 1 month highs, 1350, 52 has been a level where gold seems to be taking some resistance. Are you looking at further gains from here?
I think there is a typical disconnect between Indian and COMEX market thanks to tightness in physical side of the market. Here my take is on COMEX side, I think 1350 seems to be a strong resistance and selling may expected in the face of Fed meeting. So my clear-cut view is to buy gold, domestic gold around 3700 with the stop of 550 and upside objectives of around 31,000.
As you mentioned about the Indian markets, there is a humongous premium hanging here, $100 per ounce and more. Do you see that going away, and what's the kind of demand you're witnessing as we head into the festive season?
Some demand is inelastic because of religious or social buying pattern. Current anomalies which we are witnessing of this huge premium seems here to stay for at least festival season ends, or maybe till December, when normally typical NRI season opens.
Biren, how would you look at the base metal prices? Because copper is something that the markets do expect that you would see the surplus tripling in 2014. This year, of course, we are reacting to lots of mixed data that is coming in from China and US as well. Keeping all of that in light, how would you want to trade copper in the very near term and slightly longer term?
Near term, I think a really counterintuitive kind of rally maybe on cards in copper, say 455, 460 we may see because of mild weakness in rupee as well as technical short covering. Medium term, I'm bearish in copper because I'm expecting demand, although demand is accelerating, but supply pace is much higher because of new mining investment in the last couple of years.
Well, that's about the non-agro space, Biren. In the agro commodities, how are you looking at the edible oil space? Because we've seen some support coming in for that area, while there have been those reports of perhaps a damage in the crop in MP because of those unfavorable rains. But having said that, how are you looking at the yields and the price impact?
Here weather has played major becomes havoc for the soya crop. Here my play is definitely in a tight market like soybean oil, where market seems skewed to the upside. Here I prefer to be long around 725, stop would be 716, and upside objective 735 to 740.
Biren, also in the spices area, how would you look at the prices? Because we've seen jeera kind of take some support in the recent days. Coriander is another thing which has continued to be choppy, not much of a direction coming in for that one. Which one would you want to trade?
Jeera seems purely random, turmeric also seems random, but there is some concentration of activities by volume open interest pattern in dhania, and carry cost is too high, so I prefer to go short around 680 basis November. Stop would be 6970 and downside objective around 6680, 6700. I would also specify that I'm having no positions in FO-side commodities.
Overall, gold is expected to be very bullish, and every great correction is a buying opportunity. We expect gold to test around $1420 to $1450 in a quarter time frame, 3 months time frame. For the day, we are expecting the rupee to appreciate to around 6120 to 6130 levels. So this could trigger a small sell-off in the domestic prices of gold. One can sell gold at around 30,820 with a stop loss of 30,900 and a downside target of 30,650 levels. For the day, one can sell silver at around 49,900 with a stop loss of 50,200 and a downside target of 49,400 to 49,300 levels. We are expecting base metals to trade between a tighter and tighter range, copper in particular between 430 on the downside to 460 on the upper side. One can buy copper for the day at around 444 levels with a stop loss of around 441 and an upside target of 450 levels. For the crude and on the domestic front, it is facing a serious resistance of around 6060 to 6070 levels. So keeping that stop loss in mind, one can sell crude at around 6020 with a downside target of 5950 to 5900 levels.
Crude has gained some momentum on the downside. It has been losing ground and it has even breached the 6,000 levels. Maybe there will be a retracement soon, and on the retracement maybe it may be a good idea to sell it. 6,200 is the number we're looking at, and you could probably cover it at about 5,950. So sell crude at about 6.2 and cover it at about 5.9. As far as gold is concerned, it's not really trending. If you notice, it has just been moving into the 29,000 levels and then now into the 30,000 levels. At this juncture, since it doesn't really have the strength and unless it really breaks up on the upside, we still feel that you can probably just sell it for a trade, maybe on the downside. So at this point, we look at maybe selling it at 30,850 and then covering it around 30,600.